What's up, everybody? This is Jimmy with Trading Decoded. It is 3:52 in the afternoon on November 20th, 2024. And holy smokes, what a beautiful day. The market gave up a whole bunch of ground throughout the majority of the day, and then it literally took every single cent of it right back, both on Qs and SPY. Currently, it's the market still has another 8 minutes to try and get through the resistance that we bought our original puts at based on the Qs, which is crazy to me. That was a hell of a move to the downside, followed by a move to the upside. Not the prettiest chart on the way back up. We had some crazy chop throughout some portions of the day, but the opening move, which most of us caught this morning, was a glorious one. Glorious for me in that I caught 79.7% return on my investment on that trade, but boy, did it get to be worth a whole lot more than that if I just held on to it a little longer. I didn't, because I had a spot on the chart, on the Qs chart, that I told everybody I'm getting out if we get there. We got there, told everybody it may continue to keep going before we even got there. And it did. My contracts got to be worth well over 300% more than what I paid for them by the time the move had slowed down to a stop and started to move sideways and up from there. Am I mad? No. No. Why? Because I made what it used to take me 4.5 to 5 weeks to make it my day job in a few minutes this morning. We're going to go over that trade, and then we're going to go over all of the basics that we teach all the time. You know, when do I get into calls? When do I look into puts? When? Guys, watch the videos or listen to me in chat. Pay attention to the charts. Don't trade it. Just watch it. See if it works more often than it doesn't. If it does, then maybe you should start to have a little bit of confidence in trusting the chart instead of, whatever else it is that you're having confidence of or lack thereof. Okay. So I'm sorry. I'm getting text message by the author of my book as I sit here and start this video. But let's go ahead and launch the chart and take a look at what's going on here, and we'll see what's up. So a lot of people are asking, Jimmy, how do you know when to buy calls, when to buy puts when you're playing the morning move? Guys, there's no secret here, okay? Please listen to me when I tell you. Are there caveats that change what we may be hoping is going to happen? Absolutely. And we can discuss those caveats, but let's start with, how do we determine if we're going to start with calls or puts if you're trying to trade the morning? It's very simple. What does this look like to you? A downtrend, I hope. Well, I'm not going to ignore the downtrend. I want to find a reason that justifies me taking calls if I'm going to get into calls, but trying to trade a downtrend with calls for whatever reason doesn't make any sense to me. So naturally, I'm looking for a reason to take puts. Now at 9:25, when we were having this discussion, I told everybody, I said, guys, the problem is we just got below support here, so we really can't play puts until we at least get below this double bottom here, this candle that we made. The problem is the next line down is less than 20 cents away, and if that one is to hold and we buy puts just because we break the support, that's not going to be a move worth trading. And then even below that one, you've got another line that's even less than 20 cents away, less than 10 cents away. You can't ignore that either. So theoretically, you should wait for not only just the break of this support, but a break of any support that exists until there's room between support A and support B. So if you wanted to, you could have said, I'm going to get in off of lower highs during a downtrend. Everything was selling off here. Now, the one thing that made this trade a little uncomfortable to start wasn't the Qs. The Qs was prime for a move to continue down. So I didn't buy the very first candle. Told everybody before the market opened, I said, guys, call scenario would be a minimum of breaking the downtrend line. That's why this dotted line's here, and a close above resistance first. We never got a close above resistance. Did we break the downtrend line? Sure. In fact, we held resistance. Meanwhile, while we were holding resistance, Qs are under resistance and printing red candles. If you look, something interesting about this chart, not a single one of these candles with wicks included ever took out, meaning got above the candle to its left, starting from 9:27. So leading into the open, I told everybody, I said, listen to me, guys. We explained where you should wait if you're trying to be conservative on your entries for puts. I'm telling you, I'm going to be aggressive on puts. I'm going to be looking for puts near open. Just want to see what ADD and the Qs do first, right? It's right at the open, Qs start to drop. Looks good to me. Now, my stop loss on this trade was a candle close above the resistance that was clearly a resistance. That's where my stop loss was going to be. So as you can imagine, as we're sitting here chopping around between these two lines, it's a little uncomfortable, okay? Finally, I said, while Qs are selling off this entire time, so mind you, we're sitting here holding on to this trade, 933 comes, Qs are still selling off. I'm feeling really good because the Qs closed below support. So at least the Qs making it down to this line. That's what I'm looking for. But I was saying this whole time, guys, if ADD could just join the party and start printing some red, that's going to make this move a lot more aggressive to the downside. And as luck would have it, right here at 9:34, we get our first red ADD candle, followed by another red ADD candle, and big ones too. So at 9:34, 9:35, 9:36, look at how much faster SPY started to move. Qs was already moving down. Qs had it in the bag for the downside. That's why I held on to this trade. I just wanted ADD to join the party, and boy, when it did, party we had. Okay, I got out really early. You could see where I had my alert. It was on this orange line right here for the Qs. So, and we cracked that on the way down. I told everybody, I said, guys, this thing's got room to the downside. ADD is printing red. This trade got a lot more comfortable, and it looks like there might be a lot more room to the downside, but I set my alert there, made it very clear that if we get to that line, I'm going to take my profit, and profit I took at that point with a big old smile on my face. Would the profit have been much nicer if we got it all the way down to the pink line on Qs? Absolutely. Absolutely. There was really no good reason for me to get out of this trade at the time that I did. We weren't printing anything green. We weren't reversing course on any chart that we look at this time. If anything, I probably could have argued, hey, at 9:38, maybe consider taking profits because it's the first time we were printing a green candle after a waterfall move down on ADD. But that's just me. Again, I made a fair amount of money. I cannot forget how long it used to take me to make this kind of money in my day job. You know, I told you guys at the beginning of this video, the money I walked away with on that trade used to take me almost 5 weeks of my day job pay to make it. When I say weeks, I made almost $5,000 on that trade. 5 SPX contracts, got in, got out, and like I told you, this trade turned into well over $20,000 had I held on to it. But I'm not a guy who's comfortable holding my trades for very long, okay? So I was very happy with the return that I got there. That this right here is when the Qs were hitting that line that I had the alert on, okay? So I got out at that point. We ended up finding support there, again, mainly probably because the Qs were finding support or at least just closed below it. I told everybody, if you're still in the trade, Qs close below that line, it's very possible that we continue to move down. And as long as we close below these support levels in a downtrend, expect the move to continue down to the next support. Okay? Now, if you got in here reasonably, whether it was because the Qs closed below this support or up here at resistance or whatever the case was, yes, there was a pullback here. Yes, it did get back above this line. Yes, you may have stopped out, but if you got in up here, you're so green down here, you might be willing to stomach that because what hadn't changed at that point, well, maybe it did. ADD started to move up, okay? So that I could see stopping out of if you tried to hold a little bit longer, but we can't see the future. So you just gotta, follow your plan. I had a plan, I took my plan and it paid me very, very comfortably. The next trade that we were looking for, again, guys, we talk about this all the time because it's very, very common for people to not take a trade, see a big move like this, $4 or $5 drop, you get frustrated that you didn't take it, and then you start to wonder, is there any room left in the trade? The problem is we don't know if there's any room left in the trade. We don't know if this is the bottom of the move. We don't know if this is the bottom of the move. We don't know if this is the bottom of the move. What we do know is at some point we're going to find a bottom and it's going to go the other way. How many times have you taken a trade that you watched drop $6 only to buy at the complete bottom? It's almost like the market plays nasty tricks on us, right? I know I've done it plenty of times in the past. You just FOMO into a trade and you couldn't have timed the bottom better when you're trying to play puts. It's the craziest thing. We've all done it, and it sucks when it happens because that's oftentimes a trade that we end up holding and hoping on, which is the real unfortunate part. But as we were moving down right here at 10:09, we were always looking at the Qs, right? The Qs chart. And there's an alert here for a reason, because we said, guys, if the Qs can get below that level, now this alert was set later in the day, but this is a support level here on Qs, or on SPY rather. What was it? Yeah, we were looking for us to get below a support here, and then we were trying to get down to the next line down on the Qs at 1017, which was the pink line. That's what it was. So we were saying if we can get below this line of support here, we should close below that. If we close below that, we'd be aiming for the pink line. That's what this trade was, not up here. So we pulled back. We tried to move up. We couldn't move up. Sellers are still in control. They push us below. Again, just take a look, guys. Every one of these candles, except for this instance right here, that we closed below support during a downtrend, resulted in us moving down to the next support, sometimes stopping on, sometimes closing below. If you close below and we're still trending down and ADD still moving down, expect that we're going to move down to the next support. If we close below that, expect the next support. If we close below that, expect the next support. And yes, there's going to be a time, I stopped drawing the lines because it got ridiculous. There's going to be a time where we do hit one that stops moving down. But until it happens, assume, right, the probabilities say it's more likely to continue down to the next one than it's not. That's all. So this was the second entry for puts, and it was bringing the Qs down to their pink line, which was right here. Great trade. I didn't take it. I did the one and done here. This was a second one for people who missed these opportunities to take trades. Likewise, we're talking about potential entries to get into calls. Most of the trades that we found today came from the Qs charts, okay? So at 1037, we were putting in higher lows on the Qs. We bounced off of some support down here. Again, I didn't draw any more lines, so there may be a support there from a previous day. We recognized the higher low, told everybody, guys, that's a higher low. That's not good for puts. If you're in puts still, you might want to take yourself out if you held through the pink line. We move up, we hit resistance. We put in a higher low. This is what I tell everybody. Guys, higher lows, we're putting more pressure on resistance. We're more likely to break this resistance than hold it. If you're looking for calls, this might be your time. We break here. We're looking for the move to continue up to this resistance up here. That's plenty of room to make money. 497.78 all the way up to 498.62. Almost a full dollar move. And it only took 3 minutes to get there. 2.5, really. Okay, higher lows, bad for puts. So puts are off the table. We broke the downtrend and we're putting in higher lows, pushing up against resistance. You should expect that to break resistance, not hold it. Do not buy puts here. If you're going to buy anything, look for calls. Your stop loss would be this higher low. You're hoping for resistance to fail and move up to the next resistance right here. So that entry point was at 1031. Okay, which would have gotten you in down here. And then when the Qs made it up to that resistance area, 1033, you could have taken yourself out. I don't know why we don't have maybe I misplaced this. That might be the case. 1037, do we have a reason to get into calls again? Oh, yes, a close above this resistance. 1037? Yeah, so the same play that you used to get in here was valid here. We put in higher lows. We hit resistance, we pull back. What's this candle right here? Higher low. We talk about it. Guys, this is looking like to be a higher low on Qs. If it ends up being one and we break resistance, the next resistance up on the Qs we'd be aiming for is all the way up here. So once again, if you can get a breach or a move above 498.64, we're expecting it to run up to 499.87. So again, more than $1 move on an uptrend. Some people take higher lows as a justification to get into these trades aggressively, meaning they don't wait for the break or the close above resistance. That's up to you as a trader. But nonetheless, higher low here, higher low here, higher low here. Once we broke this resistance here, we ran up to the next one. Pulled back, put in a higher low. Once we broke that resistance there, we moved up to the next one. And we made another higher low along the way, okay, which we kind of stopped at nothing that should have acted as resistance. So now in SPY, it was a little bit less comfortable because we did get up. We pulled back. We stayed above our entry point, which was getting above support on the Qs. Qs never gave us a reason to get out of this trade. The Qs hit their resistance right here at this point. I believe it was at 1047. Yeah. So the reason the first exit was suggested on the SPY trade right here was because the Qs made it to where we wanted them to go. Now I have people that hold on to these trades a little longer. So we tell them, hey, if we get above this, we'd be aiming for $500.32. So if you're holding through this resistance, we get above it, we hold the support that was here, and then we continue up to the next resistance. Above that, it starts to get much, much choppier, tighter, closer. Resistances are much closer to each other. So you would have gone from here to here to here. From there to here, 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 and here, so on and so forth. Okay. So just keep an eye on the Qs. Once we found the top, we started to see lower highs start to be put in again. Okay. Again, guys, today was great for both calls and puts. You just had to trust the chart. It's very difficult. Again, as we're moving down, coming back off of a resistance, we recognize that we're putting in a lower high. And I said, guys, putting in a lower high, if the Qs can get below the support right here at 499.73, I'm looking for the move down to 498.95. About an 80-cent move. And what happens? Lower high, we get below that support, and boom, we head down to that area right here. Okay, so that was the second opportunity. This was that. You got in, you spent your time 1, 2, 3, 4, 5, 6 minutes in, and you moved, depending on when you decided to take yourself in the trade, we'll say 587, you got out nearing 586.10. So almost a full dollar move again on SPY. Okay. Now, we end up going down. We come back up, higher lows. We're not looking for puts. We're looking for calls. Okay, great. What are we looking for to get into calls? Well, let's make sure we get above a resistance. Okay, and again, you can see it all over the place. Higher low, barely here on SPY. On Qs, that was a little bit more defined. Okay, you got a higher low here. You got to watch out for resistance here. We get above that resistance. We know above that. The next one is here. That's where we were considering puts before. Look at where we go, guys. Right above resistance, straight to the next one. Where we hit, we pull back. And what do we put in? Another higher low. Okay, great. If we get through this resistance, where should we be aiming for next? Right here is where we were looking for. Okay, we got to it. We closed above it. Okay, where should we consider it going from here? Since we closed above it, where's the next resistance up? Right here. We struggled at it, ultimately got through it, and then where do we go? Right there. There's your next resistance to the upside. We stopped there for 3 candles, only to close above it and head where? Just, guys, you got to look left. You got to look left. And again, as you cross these levels of resistance, make those your new stop losses so that you're trailing your win. I don't know when it stops and turns around and does one of these things. Neither do you. It doesn't matter. If you have a stop loss in place, plan for the worst, hope for the best. Plan for the fact that resistance is going to hold, meaning put a stop loss in place so that if it does and comes back on you, you still stop out with profit. Hope for the best. You protect yourself in the event that resistance holds, but you stayed in because you had a stop loss and you hope that it continues to move in your favor. There's nothing wrong with that. There's nothing wrong with that. Guys, this is what we do all day long. Today's chart was aggressive. It was fun. It was fast moving. Slowed down and got choppy for a bit. That was around lunchtime, right? I got out of lunch around 12:30-ish. But again, same thing, lower highs. You could see this on the cues. This was the last trade we found because after lunch, we don't really trade much. I don't trade at all, but again, lower highs, lower highs, lower highs. ADD started to show us lower highs as well. Qs was showing us lower highs as well. So we said, guys, let's just wait for a break of support during a downtrend, see if it could come down to the next support, and rinse and repeat, in and out, day in, day out. This stuff works, guys. You just got to try it. Try it. Try it for free. Just use your eyeballs. Mark your charts up with support and resistance. Know how to look left. Remember to look left, just like you look left and right when you cross the street. Look left and, well, you can't look right. There's nothing to your right. Look left before you take your trade. Know where you might step in a pothole so that you can avoid it. Wait for the pothole to be behind you, then go and walk towards the next pothole, or your trade moves down to the next problematic area. After that, we called it right around 3 o'clock. Oddly enough, somebody was asking me, Jimmy, where would you buy calls? And is there going to be another opportunity for calls? Guys, I have no idea. I can't see the future. I don't know when we're going to squeeze, right? Which is kind of what happened into the close today, right? We moved down, we moved down, we moved down, never got to this alert. This was a profit target point. That's why that alert is there. We just never crossed it, touched it, but didn't cross it. So the alert never got triggered on the cues. Goes to show you guys. We're aiming for very specific areas. They don't get touched to the penny oftentimes, but that alert is set at 498.45. And this candle right here made it down to 498.47. So we were 2 cents off. That's why I have a 5-cent rule. Get within 5 cents of these areas, you gotta, consider taking profits when we get there. But again, I want you to look left. We held resistance here. Once we closed above it, we look for the next resistance right here. We get to it, we gapped above it, moved up, just look left. We don't know which one's going to hold. Ultimately, the orange line was trying to hold. We get above the orange line. We're looking for the next spot all the way up here at $500.88. We get there, we try to reject a little bit, push through it, blow off top, kind of like yesterday, and look at where we rejected all the way to the end of the day, into the close, guys. I want you to take note of this orange line on the cues at 503.27. Look at this, 503.27. So literally everything that the market took away this morning gave it all back at the last candle of the day. Every penny. Qs and SPY both closed damn near neutral from yesterday's closing. Okay, here's our first target high on SPY, 590.52. End of the day, 590.52. Right there. Crazy. The entire market gave back all that it took away this morning. Today was a great day, guys. I hope some of you guys made some good money today, whether it was to the downside early in the day or to the upside late in the day. Late in the day is not my jam, as you can see. Price action does price action-y things. Today was an aggressive recovery. Probably had something to do with squeezing a bunch of sellers and shorts out of the market. But more important is understanding that unless you get a move this aggressive and this quick late in the day, theta's nasty. You get a pullback like this while you're not, you're moving up at a pace like this right here. That pullback will eat every single penny of profit you made from this yellow line to this, only pulling back to here. All of it. And then you've got to make a move enormously large in the upward direction to get back your profit or back to even break even and then back into profit. Late day trading, same day expirations is very, very difficult to do. I'm not good at it, so I don't try and teach people how to do it. The price action does the price action. Price action is the same. The problem is what makes contracts, options, work the way they do is not the same all day. Okay. So that's why trading later in the day with same day expirations doesn't work as well as it does in the morning. Theta's higher, volatility is usually lower, and volume's usually lower. Today was not the case. Volatility stayed high, volume stayed up, and you got subsequent moves that moved quickly. So today would have been a prime day to trade late in the day, even with same day expirations. But again, you don't know that you're going to get this day until it happens. All right. So for us, and the majority of the people that are trading in my room, we try and take advantage of these quick early morning trades because volume's high, volatility's high, theta's low. And if you catch it at the right time, you can make a day's work in 5 minutes. And that's really the goal, not just for me, but I think for the majority of people who are trying to learn how to do this. I don't want to sit in front of a computer 7 to 8 hours a day. I left that world after spending my entire life in it. I'm 46 years old. I've had a job every day of my life since I was 14. Okay, and every one of those days, short of sick or vacation, it's an 8-hour-a-day job once I got out of high school, but part-time before that. But either way, it's a grind. We can all agree with that, right? Well, don't leave your day job to get into another day job unless it's paying better. Well, if you can, whatever that is, whether it's trading or not, right? You don't leave your current job to go to another one unless you get fired or you're miserable or you need to make more money. Okay? But if you can make your day job money in a shorter period of time, I'm failing to understand where you can't see the beauty in that. I was done working with 5 weeks worth of day job pay 7 minutes after the day started. Now I'm on the mic at 9 o'clock, so technically at 9:30, so I was 37 minutes in front of a computer. If you count the charting session this morning, it was from 8:30 to 9:37. So 1 hour and 7 minutes. Made almost $5,000 today. Only taking advantage of the first 7 minutes that was accessible to make money. So you call that what you want. But nonetheless, it was a great day for a lot of us. Our win-loss ratio, last time I checked, we had like 21 reds and 165 greens. Amazing day in the community. I love days like this, not just for me, but for everybody else in there who made money. For those of you who didn't make money or had to red book it today, it's not the end of the world. Go back, look at what you did. Maybe you made a mistake. Maybe you had a bias. Maybe you counter trend traded. What was it? Dissect when your trades don't work. See if you made a mistake and try and use that as a learning experience, not a reason to beat yourself up. We're all going to take losses. We're all going to make mistakes. That's just a fact of life and in trading. Okay? But if you don't learn from those mistakes, then they're worthless. They're more than just a loss in money. They're a loss in progress. You have to learn from your mistakes, not just in trading, but in day-to-day life too. Otherwise, you're bound to repeat them. And in this business, you keep repeating mistakes, you're going to keep giving money away. I'm trying to help you learn how to make it, how to keep it, how to save it. Get in, get out, make your money, walk away. Come back tomorrow. Risk it again tomorrow. Get in, get out, lose your money, walk away. Right? We're trying to find ways to make this way better win odds than 50-50. And I believe wholeheartedly that the things that we teach in here make those odds way better than 50-50. 50-50 win-loss ratio is not acceptable. Not for me, it's not. It shouldn't be for you. There's definitely ways to stack probabilities in your favor to have much better odds of winning your trades than losing. Much better. There's no way to guarantee a win, but there are absolutely several ways, which I share in these videos every day with you guys, on how to increase your odds of winning. All right. And with that, we're going to wrap it up. I think NVIDIA is reporting right now. That's probably why you got this madness going on. What's NVIDIA doing? Let's take a look. Yes, NVIDIA is currently down 4.75%. I would have imagined their guidance was going to be good, and maybe it is. I don't know. I don't watch earnings. because they got a lot of stuff coming out in the near future here. All their new video cards are coming out in January. They're coming out with an APU, which is going to be a CPU with integrated graphics on it that's supposed to rival that of a 4090. Crazy times. But with that said, thank you guys for watching. I hope you got some valuable information out of this video. If you did, please like, share, and subscribe. If you'd like to join our Discord community, we'd love to have you. There's links down below. It's completely free for the first week. You do not have to become a paying member if you don't want to. If you like what you get while you're there for the free week and you want to stay, continuing to get that same information, well, then I would recommend that you become a paying member. And that's pretty much it. So I hope you all have a fantastic day. Till tomorrow. I love you guys.